So the fact is, we've got around 100 million ounces available on COMEX, which is registered silver. That's silver which is ready to be delivered into maturing contracts. The amount of silver spoken for, if it's all called for in the March contract, is close to 400 million ounces. In other words, four times what's available to be delivered. Now, the question is, will a lot of that be called for delivery, or will it all get rolled to the next major month, which is May? The One of the things which makes it look like it might be called is what happened in the February contract. And don't forget, we're only about 6 days into February now, or 10 days into February. A month before, the literally all of the open contracts, 100%, have been called for delivery in the month of February, i.e., instead of the usual thing of maybe 5 or 10% being called for delivery, it actually went to 100%. So people are, on COMEX, changing their behavior, and instead of rolling over their contracts, they're asking for delivery. At least that has been the pattern in February and for the few months before that.
January
So
as well,
what
right, Clive? There was a lot, and
it
they're
it
not
looks like it.
and they're not front months, which means they're not heavily traded months.
But March is the big one. March is the
Yeah,
really,
and
really big one.
here's the open interest, Clive, 76,000. It went down actually the last by 4,400.
We've got about 19 or 20 days before the first delivery day of March. So that
Yeah,
first delivery day comes on, I think, 27th of February.
yeah.
So it'll get quite exciting to see what happens to that number of 76,000 contracts. Will it go right down to almost nothing? And if it does go to nothing, what's happening? Are people closing their positions, or are they rolling them into May? Or if it doesn't go to nothing, then the big question becomes, are they going to demand delivery at the end of February, beginning of March? But the other thing, which I think, just while we're on the subject of COMEX and so forth, we've got to watch out for, and I think this would be the biggest warning sign of all if it happens. If you see a suspension of creation of ETFs. So at the moment, when you buy an ETF, behind the scenes, the ETF provider is creating new units and buying physical silver,
Yeah.
especially PSLV. They're taking the silver off the exchange and put it in private vaults, and the silver is physically there. However, if they can't lay their hands on that physical silver, they will have to suspend the creation of new units, which means quite possibly trading would be halted on the exchanges, because it will, the exchange traded fund, if they can't create units, it won't be reflecting the net asset value anymore.
Yeah, I saw a post by Just Dario on X, and he noted that when silver was going, like from 60 to like 120, there was massive buying of SLV, and they're taking delivery of the silver, like people like the bullion banks. So the amount of shares in the SLV actually went down as the price went up. But now he said that with silver having corrected, the amount of SLV shares is gone right back up. So it's going to be a lot harder for the bullion banks to buy the SLV and demand the physical because they have to return that physical. They lease it, they lease it from the SLV. So I agree with you. If SLV stops trading, that means there's no silver out there, and it seems like a game of physical musical chairs, Clive. The bullion banks, they lease silver from the ETFs to deliver in the futures, and then they have to find it again. And one day, though, that's going to explode, I think, and it could be in March.
I mean, there is one silver trust in China where they have already suspended creation of new units. And the reason was that the demand for units in that fund exceeded what they could lay their hands on in physical silver. So they basically suspended creation. They said at one point on the secondary market, the units were trading at double the net asset value, and they had to suspend it. They not only they suspended the fund from trading, they also suspended the creation of new units. I can tell you in Geneva, one large bullion dealer is completely out of silver, haven't been able to get it for weeks.
The COMX silver market is broken. For March, buyers want 400 million ounces delivered, but the exchange only has 100 million in its vaults. That's a 4-to-1 shortage. Last month, for the first time ever, 100% of contracts asks for real metal. Nobody rolled over their paper. This is a full-blown bank run. Major dealers in Europe report being completely out of silver for weeks. People have lost faith in paper promises after seeing bank bail-ins.
Precious metals paper markets days are numbered as investors get physical. And yes, I think that's what's going on. And it's starting from the top. It started back in 2022, I think, and maybe even before, after yeah, especially after 2022, with what happened to the Russian reserves that were basically frozen when the special military operation started in the Ukraine. That's what the Russians call it. The West say it was unprovoked. I don't think it was unprovoked. If you know the history in the last 15, 20 years, you know that, yeah, the West is pushing for Ukraine to join NATO. And the West, specifically President Bush and James Baker, his Secretary of State, promised the Soviets or the Russians that after the fall of the Berlin Wall, after the Soviets withdrew from Eastern Europe, that the U.S. wouldn't expand an inch beyond Germany. But they have, and I think that's what it's all about. But that's a little bit of history. So I think it triggered massive buying from, well, I don't think, but it triggered massive buying from countries not allied with NATO. We've seen massive physical buying of gold by central banks, 2022, 23, 24. 2025, it's supposed to have gone down a bit, but I actually think the central banks are buying gold on the quiet. The Chinese actually announced yesterday or recently that they bought some gold for the 15th straight month, but a small amount. But I bet you they're buying a lot more through other channels, and also now like investors, like wealthy investors, family offices, even hedge funds, they realize that this that bubble can't, well, it will continue, but it will be at the expense of the value of the currency. And there, in my opinion, a lot of people are concerned about counterparty risk. They don't trust ETFs. They don't even trust allocated, let alone unallocated. They want the physical stored, maybe even in their own private vaults, outside the banking system. And that's why I think this is almost like a run on the fiat money system. And even Ray Dalio thinks we are towards the end of it. So how do you see it?
I think that's a given. People are now starting to say it doesn't matter whether I'm paying a premium or VAT for the silver or the gold for that. Well, you're not paying much of a premium on gold. They're saying, I've just got to have somewhere where I can reach it because I don't know what's going to happen next week, next month, next year. First of all, how is the price going to be determined on COMEX? Well, if the silver levels run down, as looks likely, the price will be squeezed higher and higher and higher until those silver levels stop falling below zero. So that's what would happen in theory, unless, of course, COMEX the CME decides to intervene and call a trading halt and talk about cash settlement. But let's assume that force majeure does not happen. Then you get if you've got all 400 million ounces demanding delivery when there's only 100 million ounces out there, that price of silver is going to go higher and higher very, very rapidly until the supply meets the demand, and that would be at a much higher price. I think perhaps for the benefit of your newer viewers, perhaps you could explain what a bail-in is.
Bail-in, yeah. Well, bail-in, I mean, it happened in Cyprus, I think, in 2013. So what happens there is the the Cypriot banks collapsed, and they are supposed to have well, they had 100,000 insurance, so anyone who had less than 100,000, they got paid. But the people that had over 100,000 in the bank, and that included like companies as well, companies that they big companies, they leave a big amount of cash in the bank. Their cash was basically taken from them so that the bank wouldn't fail. And the bank basically gave them shares in the bank in exchange for that cash, right? So instead of getting the taxpayer to bail out the banks, they get the depositors to bail out the banks. That's why it's called a bailed in, right? Is that
Yeah,
right,
and of
Clive?
course, well, exactly. At the time, there were many people in Cyprus who were saying they'd been down to the cash point to try and draw out physical euros because
Mm,
they were worried the banks were going bust, and they found that they either couldn't get any at all or they were limited to 50 euros or something minuscule.
yeah. Yeah, so they will, unfortunately, pardon my French, screw you. So yeah, I was surprised by this, Clive, because they changed as of December last year, December 1st, the amount that they protect deposits to 120,000, and it was at 80.
Okay.
So they increased about like 50%. And to me, that that smells of worry, doesn't it?
I don't know why they've done that.
Yeah, but I mean that's good for if you
But
have a lot in the bank.
perhaps
If you have a joint account with your spouse, you're actually protected up to 240,000.
so when we talk about paper, we talk about gold, which is not physically in your hands. In other words, you're relying on somebody else's promise. So in theory, you have a bit of paper which says we are holding gold on your behalf, or we're holding silver on your behalf. Now that might be a promise from a bank who's holding it, or it might be a promise from the exchange traded fund, or it might be a promise from some other institution who's got your gold. But there's no substitute for having some which you can actually touch, and you don't need to ask permission to get it back.
I
And if they
suspect
do,
that 76,000 number might even increase again. And I think they're going to stand for a lot of delivery of that because they did the same thing for January and February. And they weren't like big trading months. But as for default, the COMEX will never, well, they will not never technically default because in their rule book, they say that they can cash settle. But I think if they were to do that, it would hurt their reputation massively.
well, if the long end, the people who are the longs on those contracts demand delivery, it will literally squeeze the silver price higher and higher and higher until someone says that's enough, for my price, and they actually decide to sell into the market or deliver to the market to meet that demand. But we just don't know who is behind each side of the contract. We don't know who's shorted, and we can guess. But we don't know, and we don't know who's bought it. We can guess again. It might be the buyers, might be the people who've got no choice. They've got to have it, like the
Yeah.
manufacturers.